traders, and this is the market recap for October the 1st. What we are witnessing here is that we finally exited out of this consolidation of multiple sessions to the downside once we broke 1955, and this is your classic case of an extremely successful break. And when you hear me talking about that the break needs to be decisive with the expansion of price, you can take a picture of this and make this break out of 1955 the classic case of a very successful break on the way down. Many days ago, I warned you that 1940 in ES was coming. And here we go, we closed at 1940. We are now technically in a very well established downtrend in the short term, and as long as we remain below 1955, all rally attempts towards 1955 with 1948 being the first level of resistance is a sell until we have proof that there is a reversal on the upside in the short term coming in. However, let's be a little bit realistic here and look at our daily, and we must be aware that now that we are reaching these levels down here, some good old souls have something called Fibonacci, and I'm sure they have drawn a Fibonacci retracement, which we can actually do here for the fun of it. So they have now hooked this low to this high, and they have Fibonacci retracements. And because now 1933-ish off of where we bounced today, as you can see, was created by these Fibonacci buyers, because Fibonacci said that that's a level, they have to buy it. No, because the Fibonacci from 100 years ago said that this is a place to put your money at work. But let me tell you something, this time Fibonacci is going to be run over. But you have to be aware that there will be a little bit of a fight that will be put on between right here 1933 to 1915, because it is Fibonacci, and also it will match the touch of this trend line. That is a significant one. Once we clear below 1915, it's a free fall. Next stop is going to be 1880, and next stop after that 1840, and next stop after that 1800. This is where we are ultimately going, 1800. We have done and abused this market so bad, and all of it pure 100% based on hot air. Hot air that is coming out of the butt of Janet Yellen. That's all. Every time hot air came out of it, we bought, and we bought, and we bought. Now, there are so many problems in the world, including the very unfortunate cases of Ebola that are developing here, despite the fact that we heard from the mouth of the pimp himself personally, assuring us about 3, 4, 5 weeks ago, whatever it was, word for word, that Ebola will not come to the United States due to the magnificent and heroic measures that they were taking. Well, guess what? Guess what, folks? Another lie. Another lie. Ebola is here and is unfortunately starting to spread, and we are discovering more and more cases as the day goes. And the very scary, very scary part is that since these charlatans are completely unprepared, God forbid it starts to spread, we will be in a state of chaos. Because if you believe this pimp and his organization is ready to fight Ebola on a grand scale in the United States, you are in a dreamland. So that combined with what's going on in China, combined to the catastrophic foreign policy results that we have in the Middle East, Africa, Latin America, everywhere is a goddamn mess. So finally market is catching up. Therefore, all pullbacks are short opportunities until I believe we will reach 1800. So 48 is one level of resistance, 55 is a second level of resistance, and of course if we enter back into 55, this whole breakdown will be nil, and it is a possibility that we will run back up again towards 68 to 70 on the upside. Therefore now the wall of resistance is 1955, and under no circumstance we should push back into it. Otherwise this breakdown out of it is going to be nullified. Now in terms of a price of crude, guess what? Yesterday we got a massive collapse. Then this morning there was a euphoric buying. My upside target for crude this morning from the open was 90 to 84. That's where it was supposed to go. I was long, but once they brought B period to the very low of A, I got stopped. But 90 to 84 was the exact level out of which this push up stopped, and then from being a complete euphoric buying, it came to a complete psychotic selling, and we closed at the very low of the day at 90.75 to 90.86, which has been a level of support that I have gave you from days if not weeks ago. So now we are at a very critical point here. Crude market is telling us there is a terrible economic slowdown coming. Terrible one. And if that's the case, well, I can only let you what's going to happen to the stock market. Of course, unless there is more hot air coming out, which is a possibility. When you eat filet mignon and shrimp every day, it's not too good for your stomach. So let's look what is behind or what is below if we break. What is below is that you're going to hook these two lows here and project the trend line down, and this is unfortunately where it's headed to between 86 to 85, unless we are going to break this 90 and a half, and unlike what happened with ES this morning where the break was real out of the level that I showed you earlier, unless we break it marginally and the break fails and we return back into the 90-50 area, and then we rally back up. But as it is right now, it is looking terrible. As long as we are below 91.70, we should continue down. 90.50 is absolutely vitally critical. This level breaks, we are going most likely, I should say, if this level breaks successfully, we are most likely headed towards the 80s, and after that 85, 86 is the next level of support. As for gold, which unfortunately is now sick with 3 diseases: Ebola, syphilis, and AIDS. So until these 3 viruses are affecting gold, the piece of junk will not move out of this junky back and forth, no order, random market condition. It is now by far one of the most difficult and one of the worst instruments to day trade. Position trade, if you want to buy and have a longer term horizon, is something else. But day trading it, stay away, even if it's with Obama's money. Trading range goes from 1204 to 1225. We buy as close as to 04, sell as close as to 25 until it decides that its big butt will exit one of these 2 levels. But right now there is no indication that it will, and it is acting horribly sick. But remember, when the real estate market collapsed and the $1 million homes were selling at $300,000, they were also looking very, very sick. But that same $200,000 home went up to $600,000 or $700,000. So remember that when they are in a stage of accumulating, they will make the market condition is such until the very, very, very last bull drops the towel, wants to throw up blood and guts, and then the move starts. So I am not surprised that the charlatans have created such a bad condition for gold, so that every single gold holder out there would say, you know what, F gold. I have enough in it, I'm exiting, I'm selling, I'm out. And only then the move will start. Same with this. This one has 5 diseases. It has Ebola, it has AIDS, it has syphilis, and it has cancer. It's much worse sick than gold. So the trading range is there above 66, 26.45. We should go to 26.70, and then the naked POC up there 26.95. Below 25.77 to 25.89 we have another breakdown. As I gave you that breakdown below 1.2669, I told you to be very careful. Once that breaks, we don't know what kind of a reaction it would break, because it's a major level. And look what happened the night that we did break it. Same thing with 25.77. Watch out very carefully. That level breaks, you may see another deluge of selling. All I can say, thank you, Draghi Queen. You have done a marvelous job on destroying your own currency. Job well done, you little mini-me Ben Bernanke monkey. You guys have a great evening, and talk to you tomorrow.